TheoTrade. This is Don Kaufman. October 27th, 2021. Minutes after the cash close here on this Wednesday afternoon, the S&P futures finished down almost 20 handles. The Nasdaq up 50 handles. The Russell got pummeled by the tune of almost a full 2%. Bifurcation is everywhere, ultimately because, well, the bonds came back to life and really sparked some sell-side activity specific to the financials, energy sector. I mean, one of the things you got to take away from today's trading session, let me actually start here. Take a look at the advanced decline line. So this is the S&P 100. I mean, literally, it's, what matters inside of the marketplace. And there's almost full-blown correlation to the downside, except for what? The saving grace of none other than Microsoft. I mean, one of the coolest things that you get to see today, all right, is the market pretty much, gave us insight to what matters, what doesn't. And the S&Ps are still down about 20 points, but when it comes to big tech, do you see any wild sell-side activity in big tech? I sure don't. I mean, Facebook, all right, it gave up like a full percent. Apple basically unchanged in the day. Nevertheless, okay, Microsoft, obviously Amazon, Google, Tesla, all have a fairly wicked bid inside of it. Nevertheless, it shows overwhelming weakness to the S&Ps. And again, that's being expressed predominantly by the financials. Speaking of the financials, again, one of the places I want to start this evening is take a look at like auto expected move. How much damage was actually inflicted today into the financials? The answer is they're already to the edge of the expected move, to the lower edge of the expected move. With that, anytime we talk about the financials, we often jump immediately to the energy sector. The energy sector hasn't seen really any sell-side activity. It has been effectively straight up since, roughly speaking, mid-September. This is actually one of the larger down moves that we've seen, to the tune of almost 3%. Nevertheless, yesterday, just Tuesday, it actually tagged the upper edge of the expected move, has actually come back quite significantly. In the next day or two, I'd look for some more sell-side activity. In fact, I'd look for the energy sector to even play catch-up to the downside, possibly even tagging the lower edge of its expected move. So what give? What gives in the entire marketplace? What changed? Okay, that the S&Ps all of a sudden, cruise down 18, the Nasdaq up 50, and the answer comes, it's the bonds. The bonds took off to the upside today. Now we can talk about some of the numbers that came out today. We can talk about durable goods. Okay, a couple of news announcements throughout the course of the day, but push all of it aside. Okay, are we to the assumption that bonds have been in an oversold situation? I don't necessarily think so, but at this point, the bid back to the bonds unequivocally, all right, just pretty much hammered the financials. And from there, as I said, pulled down the energy sector, but it really didn't stop there. If you start to look, all right, at, some of the consumer staples like a Walmart, all right, everywhere actually you look on the screen, there's effectively red, okay? Yeah, sure, some of the technology stocks like a Twitter, which had earnings, got knocked around a little bit, but this is a bit of an anomaly. Again, most of major tech was actually bid with, as I said, the likes of Microsoft, Google, Tesla, which is in the middle of a gamma squeeze. So most of this being earnings related. Of course, we're going to have to wait until none other than tomorrow afternoon to see the announcement out of Amazon, which, again, if some of the sell side activity persists into tomorrow, you really have to have concern, of course, with Amazon's earnings, because Amazon is enough of a heavyweight that, again, if they did disappoint in any respect, okay, the risk would unequivocally be to the downside. Okay. In addition to that, is there going to be follow through into the bond market? This bid to the upside, how big is it? And again, one of the things I always like to try to do is to kind of quantify things using, if you will, the weekly expected move. And if you're not familiar with expected move, first of all, you got to get familiar with it. The auto expected move is how the option market kind of depicts risk on a week-to-week basis. So if you look at this and you say, well, the option market, again, it's just a great way to handicap what's really going on in the marketplace on a week-to-week basis, and we can spread this out. But here is basically like the 144 level, okay, and right here is about 146. So you can say, well, This is expecting about a $2 move up or a $2 move down on the week. Where are we right now? Oh, we tagged all the way up to what? Well, we did really tag into the 148. So at 148, what are you? I mean, you're a full like standard deviation beyond the edge of a standard deviation. I mean, if you looked at this and you said like, all right, one standard deviation is here. Yeah, we're all the way out here. Okay. It's never, never land. And when you get this far out, you could start to see things like bonds even get involved, okay, in the ever so present gamma squeeze. I mean, you think that that only pertains to products like, for instance, a Tesla, where they literally squeeze to the upside, predicated on the idea that there's a huge amount of options order flow. When you start to look at a product like TLT, and again, forgive me, yes, I'm using the ETF, but even in TLT, there is a dramatic shift, okay, in the number of options that are trading in here. I mean, today is 2 times the norm. Obviously, TLT, though, isn't exactly driving the bond market. For that, you got to start to look over at notes. Start to look at notes, okay? Check this out, okay? There is unequivocally huge size. They're almost 5 times the norm, right? Taking a look over at the bond market is trading 10 times the norm. It might not seem like a lot of size, but people, inside of the bond market, this is size by size, meaning that, yeah, it's very likely, okay, that you are in fact seeing the options market shifting, okay, some of the bond market in, again, intraday trade. One of the interesting things about this movement, we could point to durable goods orders, you could point to all these different facets of why the bonds rally, but this was just an incredibly consistent driving move to the upside. All right, which again, we very likely could see even more movement, if you will, to the upside. The only question is, okay, how long, all right, is that move going to persist inside of the bonds? And if, again, the bonds are rallying, what's it in effect doing? It's taking the interest rate down quite substantially. Just bring this up for a second. The TNX. So the TNX dropped like a rock today, almost back to the 1.5%. If this is to continue, do you look at this as a positive or negative for the marketplace? On the near term, it's definitely a negative for the financials, which again would probably also drag the energy sector down with it. Okay. When we come into Thursday afternoon, though, again, that concern, you all have to be reliant and you have to be thinking about Amazon, because today, right, push aside all the earnings announcements. If you didn't have Microsoft up 4%, if you didn't have Google up 5%, if you didn't have Tesla up 2%, the S&Ps could have been down 60 or 70 handles. And that's one of the perspectives that you need to see, is that it's pretty concise right now that, sure, could we rally tomorrow? Unequivocally, yes, in the S&Ps. However, the risk right now is definitively to the downside. We've got risk to the downside as long as these bonds, okay, are going to start to elevate. And again, the bonds, they've been out of the equation. They've been out of the equation since some of the big selling over here really kind of scared the Nasdaq. They've been completely taken out of the equation, seemingly out of nowhere. They get a wild bid under them, and all of a sudden, wait a second, that's not what we were expecting. We were expecting the bonds to sell off. Instead, they rally, and that takes the S&Ps down. Again, a highly unusual, scenario is where I said the bonds kind of came back to life and just sparked some sell side activity. And the irony is nobody saw that one coming, especially the Russell. Now, the Russell towards the top end of the range, but if you haven't looked at the Russell on a year-to-date basis, and this one is actually a little more than a year to date, but the Russell has done absolutely nothing. In fact, where the line on my screen is right here, that's the beginning of the year. For the most part, they've been trapped inside of a range. I think it's well worth noting that the Russell is long overdue for a smash of an incredibly tight range. It's notable simply because there might be a great trade opportunity in there of some like buy side, some premium buy side trade where we're looking for us to smash even below like the 2100 level inside of the Russell. Again, the remainder of this trading week, let's cruise over to the SPX as we do each and every Wednesday here at TheoTrade, just to give you a little feel. What have we done, okay, thus far on the week? All right, first and foremost, we were expecting, okay, just over about a $50 move this week. Right, so we're looking for plus or minus approximately a $54 expected move for the entire week in the SPX. We tagged it to a T, people. I mean, literally to the penny. We hit the upper edge of the expected move, pulled back hard off of it. We're almost back to where we started the week. Okay. Again, do not diminish the ability to make a very substantial move. The VIX got bid. Volatility futures got bid. Okay. What else do we have? Obviously, we see a flight into the bond market. Okay. What did the dollar do? Absolutely nothing. Again, make this a conversation piece. If you start to see the dollar rally, could be more sell side activity expressly inside of the Nasdaq. Down towards the bottom of the screen. Oh, the ever present volatility, the volatility index closing basically right at its threshold above the 110 level. Okay, is what we kind of term the VAMA zone, which we haven't been up there now in quite some time, or closed above, I should say, that 110 level. That's something, again, that's going to be ever present in the days to come. With, again, the SPX, I think you should anticipate considerable volatility on Thursday or Friday of this week. Not necessarily just because of the Amazon earnings, obviously on Thursday, evening, which is going to create some NASDAQ havoc, no question about it. But that's completely and totally a coin flip. That's one of those trades. It's binary, heads were going up, tails were going down. But in the very near term, okay, we have some decent and significant sell side activity that we saw in several products that also had, for instance, a gamma squeeze like NVIDIA. If NVIDIA's sell side activity persists, if we get persistent sell side activity out of Facebook, obviously because the sell side activity inside of Twitter, okay, it'll start to dismantle the NASDAQ. Again, coupled with the fact if the bonds continue to rally, people, again, as I said, the risk is clearly at this point to the downside. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.